What's up everybody? Welcome to the Stocks channel. My name is Corey and today we saw a pullback in the markets across the board. Will this lead to more selling and finally see that full-blown stock market correction? Or will this just end up being a pullback? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart, see what's going on in the stock market today. Alright, so today on SPY we were down 1.38% today and we definitely saw a giant red candlestick. So this is definitely something you want to pay close attention to. Now every time you see selling, the first thing you want to pay attention to is the volume. And if you start to see high volume selling, you want to get a lot more defensive. If you look at this volume candlestick, it's definitely higher than yesterday, but not significantly higher. So we don't quite see the high volume selling that's required for a full-blown correction, but obviously that's always subject to change. So looking at today's selling by itself, it doesn't seem that bearish, even though we did slightly close down below the 50 EMA. Remember, the bulls need to break out above 472 to get more bullish for new all-time highs, and we're definitely getting rejected from that resistance level. So it looks like we're going to see a cool down period before we can make another attempt to break out. So I do think you will see another crack at that resistance level in the very near future, and if we fail to break out above that level yet again, we could see the full-blown stock market correction. Now there's no guarantee we have to test that level again, but I just think it's highly likely because we did fail to break out above that level 2 times. I think it would make the most sense before a correction to try one more time at that level. Now keep in mind, we don't have a trend for the bears or the bulls, and we're getting very close to having the bull trend. So the path of least resistance is still going to be higher because we still have a macro level bull market. So your critical support levels on SPY are right around 464, 462, and our trend line level is right around 459. And below that, we need to see SPY holding up above the gap close at 455. If SPY starts closing below 455, you are looking for a full-blown stock market correction, which does mean SPY could come all the way back down to the 440s and possibly even 430s. Now, unless SPY actually closes below this support trend line or below this gap close at 455, you can't just assume that a correction is coming. So the only way to objectively know we're going through a correction is to see a close on SPY below the 450s, and then we'll know more selling is likely coming. And yes, it will be very high volume selling, as a lot of people exit the stock market, leading to that full 10 to 15% correction. And yes, it could go more than 15%. That's just a baseline. So we're getting a lot more bullish on SPY if it can close above 472, and we still will have resistance up here at 470. So follow the price action at these levels and just be patient, because as I've told you many times, you're going to know exactly where the market's going if you're just patient. We're either going to new all-time highs above 472, or we're going all the way down into a deeper stock market correction below 455. Keep it that simple and just be patient, and you'll know exactly which direction the market wants to go. Jumping over to the triple Qs, you can see a very similar sign as SPY, but a lot more bearish price action, going down 2.5%. You can see we clearly got rejected at resistance twice, and for the triple Qs, that is the 50 EMA, which is right around 389. 2 failures to close above resistance led to this selling, and we definitely broke through quite a bit of support here, but we're back down to the strongest support of all, our support trend line at 376 and our support level at 374. Remember, if we start closing below this trend line and closing below 374, we're looking for the full-blown correction, which should take the triple Qs down here to close the gap, which is right around 360. You can see from the volume, we did have higher volume than yesterday, but it's still not quite the same as the high volume selling that we've seen in the past. And obviously you will want to keep an eye on that, because if you start to see high volume selling as we slice through 374, we could get to the 360s very quickly. So you know your critical support levels at 376 and 374, and to the upside, you're looking for resistance now at 379, 383, 387, and 389. And if at any point we start breaking above 389, which is the resistance breakout level, that will instantly start looking a lot more bullish, and it does mean we could have a quick chip back up here to about 401 to 402. So you're very close to knowing if we're going to see the bearish breakdown below support, and if we see a strong bounce off of this level, you're looking for that breakout back above 389 to 390. In the Dow Jones, we were down 0.48% today, and the Dow Jones is still looking the most bullish of all. You can see we were down less than 0.5%. We did not see high volume selling, and we closed right on top of critical support at 361, and we still do have the bull trend. So one thing I like to do is look at the market as a whole, and I can't get bearish on the stock market while I see the Dow Jones in a bull trend and sitting above critical support. It just makes no sense to expect the S&P 500 to go through a major correction and see the tech sector crashing down while we still have the Dow Jones in a bull market. So while the Dow Jones is in a macro level bull trend, it's also in a daily bull trend. So by far the Dow Jones is looking the strongest of all. Watch that critical support around 361 and 360, and below that the strongest support level will be 358. And below 358, we will lose the bull trend and we'll start to see the Dow Jones starting to look a lot weaker. But right now, it looks like all the strength is sitting here in the Dow. So look for upside resistance levels at 365, 368, and above 368, a brand new all-time high price target at 372. In the Russell 2000, we were down 0.92% today and we closed right near that critical support level at 214. Remember, the Russell 2000 has the full bear trend, so there's no reason to be bullish on it, and it does look like it's coming down for that next leg lower, which is going to be right around 207 to 205. From there, we could get another bearish relief rally, which could go close the gap at 228, but there's going to be a ton of resistance to the upside, right around this breakout level at 214, 217, and then this breakout resistance trendline level right around 221 to 222. Remember, you don't want to get bullish on something that's in a bear trend, especially if it's starting to break down through support. So get ready to possibly see these next legs lower in the very near future. On the Arkk ETF, we were down over 5.4% today, and we did close below that very critical support level at $81, which means we're more than likely going down to this next support level at 78. Remember, Arkk is in a full bear market, and it's in a strong bear trend, so don't get bullish just to get bullish. We need to see a strong, decisive breakout back above $91, and we need to see price action starting to close back above 99. So for the time being, the bears are going to continue to short this ETF at resistance because it is in such a strong bear market, and the trend is your friend, so you should be expecting lower prices until we see a bullish breakout. If we fail to hold up above 78, look out below because we're more than likely going all the way down to $70. And I do think this support level at $81 is a strong support zone. So if we're breaking down through it, that is a very bearish indication. On the VIX, we were up just over 15% today, and the VIX did squeak out a close just above 20. So you definitely will want to be a lot more cautious. Remember, the VIX above 20 means more volatility and more fear, and we could see a lot more panic selling. If at any point the VIX closes back above 24, you're more than likely going to see that full-blown stock market correction. So now is the time to be getting a lot more defensive while the VIX is trading above 20. If the VIX gets crushed back down below 20 and we start trending lower yet again, that's going to be a bullish indication that this was just a pullback and we're going to resume the bull trends. On Bitcoin, we're currently down about 2.5% today and we're trading right on top of the 5 EMA. And remember that Bitcoin still has the bear trend. So right now we need to see Bitcoin staying above this support level at 40,600 or it's coming back down to supports at 38,000. Below 38,000, we should see a full flush back down to support at $30,000. So you don't want to be getting bullish unless we see a bullish breakout, which we're just not seeing. We're seeing lower highs and lower lows, and we clearly have the bear trend. So you need to see Bitcoin breaking back above 46,000 to start breaking the bear trend. We'll still need to close back above 51,000 and then eventually get back above 53,000 to start back into a bull trend. So right now, don't be getting overly bullish on Bitcoin when it's in such a strong downtrend. We could see Bitcoin back at $30,000 yet again, so don't be blindly buying at 40,000 just assuming it has to go higher when the technicals clearly say it wants to go lower. On NVDA stock, we were down 5.09% today and we did close below that critical level that I gave you at 271. So from here, we could easily come back down to test support at 253. And remember, below 253, you're looking for the full gap close at 233. And yes, it could happen very quickly. You could see this was a very vertical move to the upside and there's not a lot of support in this area. So if you lose that support at 253, we could go down to the 230s very quickly. Now to the upside, we're going to have strong resistance now at the breakdown level at 271, and we will need to see price action getting back above the 50 EMA, which is right around 284, to start breaking the bear trend. You can clearly see we're getting a lot of bearish momentum as we're losing support. So this is not the time to be buying the dip in NVIDIA blindly if we're coming all the way back down to 233 possibly. So respect the bearish momentum in the price action breakdown and be looking for lower prices until you can see a definitive bounce off of support at 253 and a break back above 284 to 285. On Tesla stock, we were down 6.75% today, and we're definitely starting to look like Tesla had a false breakout look. We had a close back above 1080, but we didn't have 2 days in a row above that level, and now we're back to very critical support levels at the 50 EMA, which is right around 1031. If we lose this support, there's one more line of defense for the bulls, which is that support level at $1,000. And below that, you're looking for a quick trip to close the gap at 940. If we start closing below 940, you're looking for 900, and below 900, you're looking for the gap close at 843. This will be bullish if we can bounce off of this level and break out yet again and get that second day confirmation breakout above 1080, and we will keep holding on to that bull trend. So you can't be bullish unless we get back above about 1075 to 1080, and you can get a lot more bearish if we start breaking back down below 1000. On Apple stock, we were down 1.9% today, and it does look like Apple stock failed to break out above that level at 176. So we're back below the moving averages except for the 50 EMA, which does mean we could be trending back down to test that level as support, which is also our support trend line right around 168. If we bounce off 168, we could still make a new all-time high before earnings, but if we lose 168, you're looking for a full-blown correction with price targets at 162 and 157. On a breakout back above 176, we'll be looking a lot more bullish, and we could retest that previous all-time high at 182. If at any point we break above 182, look for that price target at 188. On the financial sector, we were down 0.39% today, but we still have bullish price action and we still have the very strong bull trend. And like I always tell you, don't be getting overly bearish on the S&P 500 while the financial sector is looking this strong, trading at all-time highs. The industrial sector was up 0.22% today, and we still see bullish price action and a bullish trend, so we still see very strong industrial sector. The healthcare sector was down 1.55% today, and we're back below the 50 EMA. As long as we could stay above this lower low, we could still form a higher low and start back into another bull trend to close that gap above. The energy sector was down 0.5% today, but we still see very strong bullish price action and a very strong bullish trend. So jumping back over the S&P 500, don't be getting overly bearish when we see such a strong Dow Jones and we see such a strong financial and industrial sector. Remember, the stock market moves as a whole, and it takes a lot more than just a weak tech sector to bring the stock market down through a full-blown correction. So we'll need to start seeing weakness in more of the sectors to be getting bearish on this market, and we will lose that critical support, so we will objectively know we're going into a more bearish market. Right now, we're still in a macro level bull trend, and we still have the potential for a higher low forming here on SPY, so there's no reason to panic sell unless we lose a critical support level, and that should not be panic selling, that should be part of your exit plan. So make sure you have a strict trading plan and that you're buying at strong support levels and respecting the fact that you're still in a macro level bull market. Also, don't forget that I have Bank Trade Alerts, which is an algorithm driven trade alert service that sends all of your buy and sell alerts directly via email and text message and only trades the ETF TQQQ. With all of this market volatility in a brand new trading year, now is the best time to be a bank member. You can see that Bank Trade Alerts is up over 9% in the last 3 months, and this should be a great year for trading. You can find out more information about Bank Trade Alerts and how to join by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.